Hello, everybody. You're welcome to this other edition from the Think Tank. But before we get started, we're just waiting for our 3XM insiders on Facebook to join us. So while they join us, I just want to say you're very, very welcome to this. We have taken some of the learning that we've all learned from the Think Tanks up to now to bring you something that's an actionable step that you can adopt into your business right now. So we'll talk about that in a little bit in another moment now, once I know that we're live on 3XM Insiders. So I'm just waiting for that signal from my team, and when we get it, we'll be away. In the meantime, I hope you're all staying really, really safe and healthy and practicing all the social distancing and all the other important things that we should be doing to help our population. Okay, so we're live now on Facebook on 3XM Insiders as well. And I'm deeply honored to be joined by our commercial manager, Simon Nicholson, who I'll introduce to you in a moment. And we just have a wee chat just so you get to know Simon a little bit better. And then we get into the actionable step. But what we want to talk about today is, you know, turnover is vanity, profit sanity, and cash flow is reality. And I'm sure you've heard that all before. But in these times, we have to manage the cash even better than we might normally do. And unfortunately, as humans, it's human nature for us sometimes just to stick our head in the sand and hope it goes away, but it won't go away. So it's much better to know upfront as to what your cash flow within your business is going to look like. And then you can take actionable steps to deal with that and figure out what you need to do and when you need to do it. So before we get started, I just want to introduce Simon. And Simon.
Hi, how are you doing?
How are you keeping today?
Yeah, very well, thank you. Good,
smiling and good to see that smile. Come here, tell us a little bit about yourself. So you're in business a very long time, you've been in numerous businesses. So just tell us a little bit how you started in this industry, the business you had, what happened then, and then we'll talk a little bit further then about your commercial roles and various different things.
Okay, well, really, I kind of started straight out of school working in labs, so in photo labs, and from there I went on to start a company called Riding Frames, and that was based in Yorkshire in the UK, and we went up against some of the biggest kind of manufacturers in the UK making frames for professional photographers, and after around a year or two of doing that, Spicer Hallfield, who at that time was the biggest supplier in the UK, came along and said, well, you've pretty much taken all of our customers' offers within this product line. We'd like to buy your business on the understanding that you come and run our sales force for us. So I kind of went along and ran the sales force there, and within 12 months I was the sales director. And within 2 years, I was the managing director of Spicer Hallfield. We were part of a large PLC, and we were sold some years later, at which point I left.
So that was a really big business. And, you know, so you have the experience of looking at all the financials, not just profit and loss accounts and balance sheets, but also cash flow, which is key to most businesses, right?
Absolutely. I mean, that business was turning over around about 10 million sterling.
That's about $15 million or thereabouts for our friends in America.
But effectively, I've always maintained that for me, it's so much easier to run a big business than it is to run a small business. And the main reason behind that is, in a big business, you have an army of people around you that you can throw at problems. Whereas in a small business, you know, in many cases, you end up being fulfilling every role within the business.
And for us, right brain people, you know, I'm a right brain person, you're a left brain person, but the creatives that are right brain people, you know, the numbers don't naturally come to us sometimes. So we have to work at it. So we're not as logical as you guys are. So you're going to share all those skills with us a little later. But before we get into those, you also then you were in a consultancy role, and you've got into really big businesses to look at their numbers and sort them out commercially and stuff like that, right?
Yes, yeah, I did what's called an interim role, which is where you really kind of parachuted into a bigger business, and I did some work with Accor Excel which is also called the American Clip Company. So it's a stationery business. And my first thing that I did is I went to the Czech Republic and took apart a manufacturing business and put all the manufacturing disciplines in place to get that business back on track. And then from there, I was parachuted into Germany, and I worked in there, and we took apart a sales and marketing business that turned over 45 million euro, and they were losing money. So we had to kind of put all those disciplines back in there, figure out where it was all going wrong, and within 6 months get it back into profit. And I think after that I came back and did rationalization of product ranges. So thousands of different products across different countries, even different continents, and actually boiling all of that down into a sensible size range.
So it's fair to say when it comes to analyzing the numbers and crunching the numbers, you know what you're at, right?
Sure, yes.
Okay, right. Well, we'll hand over to you. Thank you so much for doing this for us today, Simon. And I know that you're going to share a spreadsheet with people after you talk them through how to do it so that people can do this in their own business. And then again, we're there to help anyone if they want some help a little later too. Excellent. Thank you so much, Simon.
Okay, I'll just see if we can share the screen now. Okay, so hopefully you should all be looking at a screen now. Just at the top it says Think Tank and 3XM. So what I've done here is I've prepared a cash flow, and what I wanted to do was to show you, first of all, what a cash flow looks like, how it works, have a look at what a cash flow would look like for a normal photographer who's doing good business. What we're then going to do is move on to the same set of numbers, but once they've been adjusted to reflect what I call the corona effect. That is to say that some pretty big things are going to happen. That is, it's likely the sales are going to go down and the cash is going to become very tight. And finally, we've actually got a cash flow that's empty, that you'll be able to download this file and build your own actual cash flow. So consequently, this first area here is instructions. There's all the instructions that are there to give you kind of a step-by-step approach onto how to do this. But what I'm going to do is really kind of talk you through this. So what I've done here is I've taken from December 2019 and gone all the way across to, I'll just highlight these so you can see what we're talking about in a moment. This area here. So December 2019 through to December 2020. And the reason why we're taking such a big period of time is that when you're preparing a cash flow, you need to look historically for maybe 2 to 3 months earlier. These are expenses, sales that have already happened, costs that have already happened. So you can, you've got something to work with, because what you're going to have to do is you're going to have to kind of find all those costs to project forward. So for example, if you have a quarterly subscription to something, you're only going to see that by looking backwards in your historical reference. So by actually recording December, January and February, so we're doing this in real time, December, January and February, we can see what sales were made in this particular business. And what we can then do is we can then start to project forward. So as I say, what I've done here is I've taken a photographer and I'm just going to press that button there, and that's going to fill it out a little bit more. So on this area here at the top is income. So I've literally listed this from job 1 to 20. Now, so for some photographers, you may just choose within your cash flow to, in each of every one of these months, is to just put a number. So for example, you may decide in down here in March, you may decide that you're just going to put in there sales of £4,000 and have one line. For somebody else, like a wedding photographer, it may well be that you've already got booked in plenty of weddings throughout the year. So you know that you've only got 25, maybe 30 jobs, and you can drop them in month by month into this cash flow, so you can see kind of how they will perform. This kind of green line here, what happens here is these have some formulas in there, and they will actually tot up whatever columns that you're actually making. So in December, this photographer did 7,650. January 4,434, and so on. So this photographer is destined to do round about 80,000 in my example. And bear in mind that this is it's just taking what I know about photographers, what their year would generally look like. I mean, it's quite common for photographers to have a fairly quiet January and February. And what then happens is as you kind of get further out, the year tends to get busier right up till November. And of course, December is such a short month, albeit a very busy time with kind of rounding things off. It tends to kind of just dip in a little bit at the bottom there. So that's kind of the income piece, both in terms of historical and also the estimated income coming forward. The next section down is expenses. Now, expenses are pretty much everything that's going to leave your bank account. And once again, the first thing to do is to fill in the historical information. So what I've done here on the left-hand side is I've recorded some common costs, you know, whether it's the rent or the mortgage or the business rates or the gas or the electric or the water. Recorded all these down the left and then proportionally dropped them in across the various months. Now, in some cases, I mean, typically on something like rent or mortgage, sometimes you'll pay monthly, sometimes you'll pay quarterly. But as long as this all gets filled out so that it completes it right out to December, we can start to get some really good and accurate information. Now, what we also have here is things like equipment leases, monthly subscriptions, social media advertising. Some of these links, some of these costs are what are called variable costs, and some of these costs are what we would call fixed costs. Now, just to help define what the difference between those, a fixed cost is something that is pretty much there throughout for your business for the year, and it doesn't matter if you do one job or if you do 50 jobs, it's still the same. So, for example, your rent or your mortgage on your space, you could sign up for the space, get in there and get started. You could do 100 portrait sittings, or you could do no portrait sittings, but the actual mortgage will remain the same. So that's a fixed cost. What you also get are things called are the variable costs. Now, for example, a variable cost would be your lab bill. So the lab bill I've got down here, and what I've done for this example is I've made the lab bill about 20% of the sales that this photographer is making. Now, a lab bill is a variable cost, and the reason being is that if you do no sales at all, you should have no lab bill, and if you do 20, 30 sessions within a month, well, then your lab bill is going to go up. So that variable cost is in there. Once we get down to the bottom, we have our total expenses, and I've left you a few spares here, and this will be in the one that is available for you to fill in. But within the spares, you can just go in there and just say this is going to be insurance. Just change the name. Whatever's important to you, whatever you think we've missed within here, you can drop that in. What this will happen next is on this line here, total expenses, these green cells will add up all the expenses in this particular column and drop it in there. What we have done is we've locked the green cells. So that's where all the formulas are, and it will prevent you from actually kind of, by accident dropping into those and damaging a formula. So those should be fine. Once you've actually filled in all your expenses up here, that will all be totted up. And then we get to this line, which is net flow to the bank. Now, net flow to the bank is what we do is we take your sales up here, so 7650. We take your expenses here, 6265, and we say what's left, and that is net flow to the bank. So in some cases, you can see here 1385 is you've got more money going in the bank than coming out of the bank. But the next month, you've got 3,166 coming out of the bank. So you've actually taken more out of the bank than put into the bank. And this is projecting all the way through. One of the final numbers that you're going to need is the opening balance of your bank as of the 1st of December. So for this photographer, it was 3,500. So that is literally going back to your bank statements, going back to the last day of November or the first day of December, or whatever that number is in terms of cleared funds. And that can be an overdraft number, it can be a minus number, or it can be a positive number. But whatever that number is, drop it into this cell here. This photographer is starting with 3,500 in the bank. In overdraft facility, it's not unusual for a photographer to have a small overdraft facility. It might be 500, it might be 5,000. It really depends on the size and complexity of your business. But if you have a £4,000, a 4,000 overdraft, just drop it in here. If it's 10,000, drop it in there, whichever number that is. Okay, so we come now back to the system. The sheet is actually going to do the calculations here. So this is actually going to take your balance, which it takes your starting, in this case, it takes your starting balance of the 1st of December. It takes the net flow, which in this case is going to go up by 1,385. And there we have it, 4,885. And the sheet will calculate your balance all the way across. We've got the overdraft in there, and then the very last thing on the sheet is something called headroom. So what is headroom? Okay, so headroom refers to how much space you have cash-wise within your business. So it's really a metaphor. So what I would like you to imagine is, if you were to imagine kind of walking into a cave, and it's a very spacious cave. And when you're inside this cave, I want you to think about the space as money. So as you're wandering around, if the ceiling's very high and there's lots of space, well, you've effectively got plenty of money within your business, and you can concentrate on running your business without worrying too much about the cash, because you've got plenty of it. But imagine as you walk through the cave, the ceiling starts to come down, and it's not too long before it's just above your head. And then you go a little bit further, and you're actually kind of almost like a caver may do, you're almost on your knees, and it comes down, and eventually it goes right the way, so there is no cave at all. So what headroom does is it calculates the balance of your account, which in this case is 4,885. I know I've got a 4,000 overdraft, so it's saying my headroom, my space to work within is 8,885. And you can see along here that in this example, the headroom is very good because we've got plenty of it. But that doesn't mean that, we've got here in July, our balance of our account, we're 9,000 overdrawn. But because of our 4,000 overdraft, we've actually got 3,000 in headroom. So headroom is a financial term, but it's a good way to think about cash and about how to do it. Okay, so what I'm going to do now is I'm going to jump on to the next tab, and the next tab is exactly the same sheet, but what I've actually done here is I've tried to imagine what might happen over the coming months. So we've got pretty much the same in December, January, and February. But what I've said is in March, I think that sales are going to be cut short. So you're going to start to get a little bit less money there. By the time you get to April, May, and June, I think those months are going to be hit very hard. And so I've taken, I mean, these numbers, as you may recall, let's see if we can just go back to them. We were in the 5,000 or 6,000, about 6,000. Here we're dropping down to 1,400, 1,100, 1,200. So I'm saying April, May, and June hit very hard. July possibly coming back a little bit, and then generally kind of gradually building it over the year back up to not as good as it was the prior year, but replacing some of that goodness back into the business. Now, you may agree or disagree with those numbers, and that's fine. For this example, we just try to really put in a, we think is possibly a conservative estimate of what's likely to happen. So this works exactly the same as before. We've totted up all of those sales that we're making in the green line. The actual expenses for this example, I've left exactly the same. So when we get down to the bottom here, our expenses are pretty much what they were before, but look at the net flow to the bank. So it's gone, there's lots of minus numbers here, minus 3,166, minus 181, minus almost 3,000. We drop down, we look at our bank balance, it's starting off at 4,885, exactly like the previous sheet was, but you can see what's happened here, minus 1,400, minus 5,000, minus 8,000, minus 12,000, and on it goes to minus 15,000. But you'll see here, there's one or two hot spots. So we've got minus 17, 18, and 17 there, and it actually recovers a little bit, because if you remember in our example, generally October, November, December, the situation improves. Let's go down and look at headroom. So headroom, we're okay, we're okay, we're okay. And here, this is where it starts to go. So what month is that? That is April. So in April, our headroom is gone. We're beyond our overdraft limit, and that is going to be a problem with the bank. Now, in a minute or two, what I'm going to do is I'm going to jump into another spreadsheet, and I'm going to show you what I would do to fix it, because this is by no means the end. This is really the beginning. This is the beginning of what we've done so far. Is we've really recorded, if I do nothing, what is the situation going to be? I know what my costs are going to be, because they're pretty standard and static. What I don't know is what my sales are going to be, and I can only estimate those. Okay, let me just unshare this one. Just a minute. Okay, and we're back. Okay, so I've taken exactly the same spreadsheet we've just looked at, and what I've tried to do is to say, well, what kind of measures can you take to actually to improve the situation and to get yourself back into a cash positive position? So what I've done here is on the mortgage and rent line, I've rang up my landlord and said, look, I've been a great tenant for many years for you. I have a cash flow problem, and I really need a payment holiday. And I know certainly in the UK, we're talking about things like mortgage holidays. And I know there's all kinds of measures being put in place around the world. So it's not unthinkable. I mean, if you think about it, for a landlord, if they've got a good tenant who's always paying the bills and they're looking after the property, you know, people want you to stay with them. So I'm not saying that everybody will, but potentially, you know, you could go and you can say, look, I'm looking for a payment holiday of 3 to 4 months. So what I've done here is I've taken this down to 0 for those 3 months. What I've also done is I've looked at things like monthly subscriptions. So those may be magazines and all kinds of things. And I've kind of gone from 75 a month, and I've reduced that down to 30 a month. So we start to claw back a little bit of cash there. There may be magazines that you currently get, and you just don't read them. You just never got around to actually cancelling them. Social media advertising. Now this is a difficult one, because there's going to be half the audience out there say, "Oh, I wouldn't do that," and half the other people saying, "Well, we need to do this." What I'm saying is that in April, May, and June, when it's those very bad months, I would turn off my social media advertising. You may disagree, but my logic is this: is that if everybody is literally isolated, everybody's focused on themselves, I would rather save this money to use at the launch period at the back end. So there are things, and we've had several webinars up to now where people have talked a little bit about this, photographers who have a great deal of experience, and they're saying, well, during this time you're probably not spending dollars, but it doesn't mean that you don't have to be visible. You can do other things to be visible, contacting past clients, see if you can help them, things within the community, not going out and meeting people because you've got to do your distancing, but there's things you can be doing to remain visible to your audience. But in terms of spending the hard and fast pounds or dollars or euros for this period where people are just completely consumed, I would turn that off, and I would make a saving there. What I've done down here is for my fuel costs. I've actually reduced those down, so my vehicle's not going anywhere, because I'm not doing the business I normally do. My postage, I'm not posting orders out, so I've reduced those down. I had a couple of events here for accommodation and food and bar bill. Those are events I were going to go to. I'm not going now because they've been cancelled, so I've taken those out. Software monthly payment. I've heard quite a few people on Facebook saying that they've contacted people like Photoshop, and they basically said, look, don't go, don't turn it off. Let's give you 3 months free, and let's see how we get on. It's back to this situation that these big companies are just like us. We don't want to lose customers. If it's a good customer that's always with us, we want to help, and this is one of the ways that they can help. So I've taken that down to 0. The tax bill. Now, there's lots of nationalities listening here, so we all have different tax systems. But essentially, with the tax system, if you go back to the taxman, particularly in this situation, and say, look, I'm not going to have enough cash to pay my tax bill in July, but what I can do is I can break that into 4 installments and pay you August through November. I suspect that you're going to get a positive response, because they still want to collect that tax, and it's not like you don't have a solution. You're just breaking it down to pieces and spreading it out a little bit. Wages. Now this is a tricky one, because what I've got here is this photographer was paying themselves $2,500 a month, and I'm saying for this period you're going to have to take a hit and take your income down. Now that's tough, and I'm sure we've all done it before when times are hard. And to facilitate this, you possibly could do a second cash flow, which looks at your home life. What savings can you make in your home life? And we've prepared one of those, and we've included it within this document. But all we've done here is we've taken the $2,500 down to about $750 a month for 4 months, and then started to bring it back up, and then finishing the year back where you started. So it takes about 10,000 out of the overall thing. So what's happened? So obviously our expenses have gone down. Our net flow to the bank has improved. There's still 1 or 2 minus numbers in there. Our balance is sometimes positive, sometimes negative. We're utilizing all of our overdraft a lot of the time, but look at our headroom. And our headroom it's the important one from the point of view of this is the line that's going to tell you can you stay within those promises you've made to the bank. And you can see here now we're cash positive in terms of the headroom all the way. So we come very close, 582, 457, 906. But by the time we get to the end of the year, we're starting to put some goodness back into the business. Okay, down here, what we've actually done is prepared a cash flow for you to go in and fill in using all of those things we just talked about. We have the instructions built in with this sheet as well, so you can do step by step. I've also prepared home cash flow, which you may or may not wish to do. So the home cash flow, the income side is greatly reduced, and the reason why I've done that is that your income is potentially could be the money you pay yourself out of the business. It may be during this time when the income dries up that you do a part-time job or something like that. Or for a lot of photographers out there where photography is a second career, you may well have a pension coming in. So you can record all of those things within this income line here. I put some expenses in which are more in tune with home payments like cable TV and car insurance payments and house insurance and so on, credit card payments. But I've left you loads of spares here for you to just kind of, go in and really personalize this. And once again, once you've actually dropped all of this in, it's going to give you everything from your total expenses, your flow to the bank, your bank balance, and it's going to give you the headroom you have available. And finally, what we've also done is we've included a spare business cash flow and a spare home cash flow. And the reason we've done that is that, some folks, it's a complicated life. You may have two businesses that you run rather than just a single one. So you may want to record those separately, or it may be two completely distinct genres of photography and you want to look at them individually. That's pretty much where I am at the moment. We're certainly available to answer questions. I'll just unshare this now and hopefully Rowan will pick that back up.
Simon, thank you so much for that. And I know, guys, sometimes the numbers are boring to a lot of us, but it really is really important to get to understand them, because you can see here that if you're aware of what you need to do, well, then you can put actions and plans in place to make that happen. We've had very little questions, Simon, other than, is the spreadsheet going to be available for download? And yes, it will. It'll be available. This recording is also available in 3XM Insiders. So if you're not in 3XM Insiders, we encourage you to join 3XM Insiders. And I haven't had any questions, but I'll leave it open just in case there are some questions, Simon. So Simon, are you suggesting then to us that where should we start? Should we start with the business cash flow, or should we start with our personal cash flow, or does it matter which order we do those in?
I would start with the business cash flow and just get a picture of what the business looks like. And the hardest piece is going to be plotting the sales line running between now and the end of the year. And that's driven by the fact that there is so much uncertainty, and I don't think any of us really know what's going to happen. So we're going to have to take some kind of educated guess as to what might be. Maybe one of the things you could do with the additional business cash flow is you could do a best case scenario and a worst case scenario.
Okay.
To say how that looks.
And then when I'm putting in the sales of my cash flow, so if I'm a wedding photographer, for example, and I have a wedding in December, but they've paid me 50% deposit now, I put the 50% in now that I receive, and then I project the other 50% in December if I'm getting paid the day of the wedding or just before. Okay.
This is not really about profitability. This is all about cash, and it's the lifeblood of your business. So it's recording it in the month that it comes in. One thing that you must consider is that, of course, if people are paying you deposits for future work, in a perfect world, that would be considered to be a deposit and be kept separate because it's not yet revenue. You've not yet done the job. But for the purpose of this cash flow exercise, this is about seeing how much cash you have available. It's the ebb and flow of the cash. And what can happen is that within your cash flow, sometimes you take a look at it and you've got a big hole right in the middle, which may be the tax bill or it may be paying the rent, or something like that. And sometimes just moving that 1 month or just breaking it into 2 pieces and paying it in 2 months is all it needs to actually fix it.
Okay, and I have a question from Rob, Simon. Is headroom is what in the USA they call margin or margins?
I'm not sure actually.
Yeah, I don't think, I'm not certain it is. I think margin maybe, so added value margin, for example, is if you have a job that you charge 10,000 for and you're buying 2,000 from your lab, your added value margin is the 8,000. The headroom is more calculation as to, if you think of it like Simon said, the space in the cave. So you could go into the cave, it's how much room you have around you or how much oxygen you have around you, if you want to think of it as oxygen. So cash is like the oxygen in your business. So it's just a way of calculating, you know, what the cash flow is going to be, then what your overdraft is, and how much headroom do you have. If that headroom goes negative, well, then you run out of oxygen or you're having to bend down in the cave. That's pretty much it. I don't think it relates to margin exactly. Andrew says, I assume, which is not a good thing, hence asking, if we add up a row in the income or the expenses, this should be calculated into the green lock boxes you have. Yes, Andrew, Simon has built a calculator that will do that calculation automatically for you. Is that correct, Simon?
Yes. All the columns just total up and do all the calculations, and those green cells are locked so that you can't disturb the formulas.
And green doesn't mean you're okay, right? Green just...
It's probably the wrong color to use, to be honest. But yes, it's just a color so that you can see that, you know, those are where the calculations are.
So if it's a minus then, so if the headroom is minus, that means I've ran out of space, right?
Yes.
Okay, excellent. Wait till we see, is there any more questions coming in? I don't think there is. So thank you so much, guys, for joining us today. This recording will, thank you very much, Simon, for your time. We really appreciate that. There are more things coming from the think tank today. So later today, we have Ron Nichols doing virtual IPS. So for those of you who have clients who are still in the mindset to do a virtual IPS, he'll show you how to do that. So that's really, really good. And then tomorrow we have our social media group from the think tank, and they're under Brian Welch or Walsh. I'm not sure how he pronounces it in the US, but so Brian will be bringing you through with his team. I think he's 11 on his panel, and they're going to be looking at social strategies that you can employ in your business today. Then on Wednesday, it looks like we're going to have something absolutely every single day this week for you. So we hope you're finding these useful. We will turn them into actionable steps like we have today. This came out of the financial webinar we had earlier in the week. So stick with us. We hope we'll bring some things to you to help. Andrew has just said, my point was, if you add insert a row, so if they add a row, Simon, into the calculator, will that throw it out or will it be okay?
No, it should be fine. It's worth just doing a test. But yes, if you insert a row, because I did check this earlier before putting the spreadsheet to bed, in the row that you've added, if you just throw a number in there and make sure the calculator changes, but it should be fine.
Okay. Where do we download from? Please join 3XM Insiders, the closed group on Facebook. We have all these video recordings in there, as well as we will have all the files, so you'll be able to download it from there as well. Okay, I think that's it for today. Thank you so much for joining us. We hope we've brought you some useful tool to help you plan out your cash flow as we work through this. We will come out the other side, guys. You will be better for it, because a lot of businesses don't do this, and we should be doing this in good times as well as in challenging times like we have now. So hopefully it's given you a skill that you may not already have, and together we are better. Together we will come through this. Thank you so much for joining us today. Bye for now.